Good morning, good afternoon, and good evening, everybody. Hey, welcome to this episode of the Note Closure Show. As always, Scott Karst, excited to be here with you today. Really excited about this guest. Now, this guest is a part two of the previous episode you just listened to. We obviously, if you hadn't listened to part one, go back and listen to part one. We had Chris Ruther from Turbo Tenant on here who just absolutely killed it. Great episode, great stuff. Our guest on part two here, he is the co-founder of REI Hub, which is also part of Turbo Tenant, and they're providing intuitive accounting software tailored for rental property owners and real estate investors. So that works for all of you guys listening to this, whether you're buying notes or have rental properties or fix and flip stuff like that. REI Hub enables landlords to be their own bookkeeper and get it right, which is important these days, especially as tax time is coming up. More quickly and easily than ever before. REI Hub also partners with industry leaders providing property management software. Companies like TurboTent provide investors with a comprehensive and easy solution to all their rental property. And so we're honored to have the man, the myth, Mr. Adam Hamilton join us today. What's going on, Adam? How you doing today, bud?
I'm doing great. Thanks so much for that wonderful introduction, Scott. I appreciate it.
Hey, no problem, man. I'm available for birthdays and bar mitzvahs and weddings too, if you need me to ever to be
Oh
like your
man,
front
we need to
man.
get you on Cameo. Yeah, you got to flow with that.
There you go. Exactly. So let's talk a little bit about before we dive in and do a little bit of a walkthrough. Talk about kind of your journey and what's really led you to where you're at today with especially REI Hub.
Absolutely. So I have a little bit of a background in both small businesses and rental properties. And what that really led me to realize, especially going to investor meetups and talking to so many of the people in the industry, is how few people knew the score. How few people, when you say, hey, how are your businesses, how are your rentals performing? Like, what KPIs are you tracking? What intelligence have you gained from your bookkeeping in the last year? So few people had answers. And I feel like on the traditional small business side, startups and things along those lines, people understand and accept the value of bookkeeping and accounting. But in the rental world, there's a little bit less of a focus on it. It's a little bit more of a chore, a little bit more of a have to, rather than the opportunity that it really is to run a better business, gain more understanding of the business that you're running, and help yourself now and in the future at tax time, making sure that you are doing things right and paying as little taxes as you can legally. So
Do you think that comes from investors being, oh, I hate to say this, control freaks and trying to do it all themselves in a lot of cases? Jack of all
a little
trades?
bit, a little bit, you know, it's an interesting industry we're in where we have these businesses with massive asset valuations, millions of dollars, hundreds of thousands of dollars, all being run and all the financials being run by, guess what, a non-financial professional. What other industry, what other business do you encounter that in? I would say almost none, because it's a little bit about who becomes a real estate investor. And it's not just people who have financial experience. It's your average everyday professional who is looking to grow, expand, get ready for retirement, have a side hustle, do more with what they have. And what makes real estate so interesting and appealing is that there are so many different ways to get into it and so many different ways to succeed in it. But that doesn't necessarily mean that because you're great at finding a good deal, great at finding an off-market deal, great at finding a note, that you necessarily have that financial experience. So you kind of wind up in this situation where you've decided to become a real estate investor, you've decided to become a note investor, you've gotten into it, you've learned about it, you've started to be good at it, you found a tenant, you figured out how to collect rent using a great product like Turbo Tenant. And then 6 months down the line, you realize, wait a minute, I have to file taxes. Like I have to find out why there's no money in my bank account. And that's when they come and look for an accounting or a bookkeeping solution and then realize just exactly how deep that well goes and how complex it can get.
What do you think the three biggest mistakes investors are doing that run into that issue? Like, oh shit, I got to pay Uncle Sam his pound of flesh, and there's nothing in the kitty for it.
Well, I think that a lot of people, they don't start from a strong foundation. And just like anything else, if you don't know, if you don't have, your feet underneath you, it's going to be really hard to take a lot of good steps. So when you're starting off your investment journey, you might not realize the value of important steps like separating out your business and your personal finances. And guess what? If you've been running your rentals for 8 months and now you realize maybe those things should be separate, you're going to have a lot more work to do than if you just from day one realize, hey, I need a different bank account, right? Another thing people don't do is they don't start and then review. You know, a lot of times people will just kind of say, okay, well, I think this is the way I'm supposed to do it. And I'll just enter these transactions and I'll just put this over here. But they don't take a moment and say, well, what kind of reports does that give me? What am I getting out of my bookkeeping? And how can I then realize too little too late that I needed to set things up or I needed to do things differently? And then that creates a lot of make work kind of at the most pressurized time of year as we're about to enter into tax season. And oftentimes investors don't stop to think and realize, hey, maybe there's a tool for this. Maybe there's something that's built for people like me that can make some of these steps a little bit easier. Because if you're using a spreadsheet, if you're using a generic accounting software, you might not have the organizational framework that is going to help you make good decisions along the way without even realizing it.
Yeah, that totally makes a lot of sense because a lot of investors get into they love the idea of, let's just use a term here, sausage, but they don't necessarily want to go into making it with all the ingredients properly. You know what I mean?
No.
We like the rehab side. We like, oh, let's get it fixed up and turn a turd into a diamond and then put somebody in it. We're getting 200 or $200 a month cash flow or $300 a month cash flow. But how, they're used to that. It's a different hat putting on instead of going from the fix and flipper or the landlord to that financial expert. And I think a lot of it goes with, so as you said, all these real estate clubs, all these investment clubs, all these conferences oftentimes focus on the origination of the deal, not the continuation of it, which is really an art, but not that difficult to find, right?
Well, it's a different skill set, and it's a different mindset. And to be frank, there's nothing wrong with that, right? Like if we weren't deal makers by nature, then it wouldn't be happening. And there always comes a point in every investor's journey where you have to decide what is your unique advantage. What is it that makes you special, that's making your business work, that's keeping that money flowing into your pocket? And at some point, you might reach a level of sophistication, a level of complexity, where you realize that, hey, finding the deals is my unique ability, maybe not bookkeeping for them. But it takes a while to get to that point because an outsourced bookkeeper is expensive. And you can be looking at bills easily in the hundreds of dollars per month or thousands of dollars per month, depending on the size of your portfolio. And that doesn't happen overnight. And so until you get to that point where you realize and you recognize, hey, I need to find out what I can do best and what somebody else can do best. Before then, it's on you. And that means that you should be looking for opportunities to make things easier on yourself, to install systems that are going to benefit you in the short term and in the long run, and to find potentially members of your team or outsourced members of your team or companies that can help ease that journey as you are learning and growing and expanding your abilities in these different areas.
I love that. What do you think are some of the top overlooked, let's say, profit or cost savings benefit that you find that a lot of investors forget about or just don't know about when it comes to their books and upkeeping of their books and accounting stuff?
Great question. Great question. So, at REI Hub, we have a tax review process that we walk people through. It's just an available report to help make sure that you're not missing some of these easily things that are easy to miss. And that's the first thing that comes to my mind. And the things that we'd help you double check for there are, number one, have you entered in all of your transactions? Have you claimed all of your deductible expenses? It sounds really simple, right? Because that's not necessarily saying, oh, your maintenance expenses. But if you're using a personal account that also has your rental property in it, you're going to have 16,000 transactions and not all of them are going to apply for your rentals. So what does that mean? It means it makes it really easy to miss opportunities for times you have spent money to manage or maintain your rental business, and therefore you are not claiming all the deductions that you can in order to reduce your taxable net income. Or if you're not using a software, even if you do have a rental specific account, maybe you're using spreadsheets and you're counting on yourself to manually enter in every expense. Well, again, that's not a system that is set up to help you. That's a system that's set up to allow for omissions because you don't also have double checks, making sure that you are catching all those things. So number one is make sure you know all the transactions that apply to your rentals. Make sure you get them all in the system. That's structural. But then there are also some more specific things. We want to talk about an easily missed deduction opportunity. Mileage. Have you driven to manage or maintain your properties? Guess what? Every time you drive from property to property or from property to Lowe's and back, that's an opportunity for you to achieve a tax deduction. You just have to keep the records. You just have to make sure that you are tracking that so that you can take advantage of it. And it's really easy to say, you know what, it's only 65 cents a mile or 70 cents a mile, like no big deal. But the year is long and over time, that adds up. Another opportunity that a lot of investors miss out on is, and you shouldn't be missing out on this one, but it's possible, is when you are keeping your books, when you are a real estate investor, you have a lot of loans, right? And loans are complex financial transactions because in a loan payment, in a mortgage payment, you actually have several things going on. You have a loan repayment, principal pay down, which is not tax deductible. That's just you paying back money you borrowed. The government doesn't let you take that back. You have interest, which absolutely is tax deductible. And then it's a key component of your profit and loss and your Schedule E to make sure you're entering in that in. But let's think about investors who have these escrowed mortgages where the bank is responsible for taking your, collecting money from you on a monthly basis to pay your taxes and insurance bills. But guess what? If that's coming out of your escrow account, that's not coming out of your bank account. Even if you have a rental specific bank account set up, you don't have a transaction saying, here's the $2,000 I paid in real estate taxes. That's coming across your mortgage servicer's account of your escrow, which is your money. And you might think, well, I'm entering in my mortgage payment every month. But that escrowed piece of your mortgage payment, the IRS does not allow you to deduct directly the escrow contribution from your mortgage payment because that is your loan servicer's best guess at 1/12 of what they think needs to be in your escrow account to pay your insurance and tax bill. The IRS says that doesn't fly. You need to enter in the actual expense, the actual transaction where you paid your taxes, you paid your insurance, or your mortgage servicer did so on your behalf. So even these are real chunky expenses, right, Scott? I mean, this is thousands of dollars per year. And hopefully you're doing a good, smart review before you're entering your taxes at the end of the year. And you are taking and saying, wait a minute, why is there a zero in this insurance category? Why is there a zero in this tax category? So hopefully you're not missing it from that perspective. But all the same, a huge one that you need to make sure you are double checking, especially if you've got an escrowed mortgage. And then the last one that is really easy to miss out on is depreciation. And we know about depreciation because this pops up in every single article you're going to Google about tax tips for real estate investors. But it's still easy to miss because it's complicated. It's because it's a little bit more abstract. It requires a little bit more understanding of the tax code and accounting principles than a standard deductible expense. But it's something that is going to make a big difference in your numbers. And it is often the key differentiating factor between being cash flow positive in the real world and showing a loss on your taxes, which is one of the key things we're really optimizing for as real estate investors. So when it comes to depreciation, I don't want to get stuck in the weeds about that, but it's something we often tell our customers at REI Hub and Turbo Tenant that you don't have to track it if you're using a CPA or tax preparer, but somebody does. And before it goes on your taxes, before you sign your tax return, you need to make sure you've got entries in your taxes and your insurance and in your depreciation columns on that Schedule E per property.
Yeah, that's definitely important. On the note side, I would add into knowing if it's a short-term capital gain or a long-term capital gain. In a lot of cases, too, adds
Great call out.
a big impact. Especially we see that in the note business when people go to like modify or reinstate. It's a big difference when it comes to modifying the loan at 365 or 366 day versus 364. You know what I mean? It's a big difference.
Absolutely.
Taxes. And then one thing that's been pounding my head is too, having a good bookkeeping and keeping accounts separate is also a great asset protection strategy to avoid commingling of funds and piercing that corporate veil So that you
100%.
that's one of the most important things. People don't often think about that as the bottom line, but a
No,
lawsuit
no,
is
and
not cheap no matter what, even if you're innocent of anything being
no,
sued.
and I'm guilty of thinking primarily through the financial lens, primarily through the tax lens, but that's not all that's going on.
Right.
There's liability, there's assets, there's a huge legal side of this where oftentimes your how you're handling your finances not only can, like you said, put you at risk of piercing a veil, but it can also sometimes help signal to the IRS what you're doing. And there are different things, along the lines of, active participation, passive participation. Are you sending 1099s? There are different things also that can impact how the IRS is perceiving your business, or that you can use as examples of, hey, I'm doing this. You should consider me in this fashion.
So true about that. Because people will forget about it, and you've got to provide that, especially if you're bringing on investors and paying them, monthly payments or quarterly payouts, or you've got in syndications and things like that. There's a lot of things that go along with that paperwork wise. If you're used to painting and replacing carpet, you're not the right person to be doing it for your business.
Absolutely. And, a good CPA is often worth their weight in gold. I mean, the the things that they can think of that are not top of mind for you are large and impactful. And something that also should be done as early as possible if you're looking to grow and scale your business, because oftentimes how things are started has a big impact on how they finish and roll through at tax time. And, from my side, from the TurboTax and REI Hub side, we're not your CPA, but we are helping provide your CPA their ammunition. They can only work with what you give them. And so good, clean books that have all of your transactions, that have all of your revenues, have all of your expenses, have those capital expenditures and fixed assets considered as well, are what they work with. And so you need to give them what they need so that they can help you in the way that they know how.
Yeah, that's definitely important. I mean, CPA is an important person to have, thinking big term, big things, big deductions. Maybe not in the line item things, but that's where REI Hub and stuff like that can help you kind of download that dump, put that stuff together so you give them what they need to either make an impact on your taxes or long-term wealth growth and strategies as well for you.
100%. They're not going to be looking back at your bank accounts unless you ask them and pay them a lot of money to. They're going to be looking at the reports that you give them, and that's their fodder. That's what they work with.
Let's talk about some of those out there that maybe been avoiding that, haven't filed tax the past couple of years. They may not have all their invoices, but they've got a credit card statement or bank account they can go back in. Is that as effective if they could get started, go for this year and then work their way backwards? Or what would you recommend to those out there that kind of been avoiding Uncle Sam?
Oh, that's a great question. And there's definitely going to be some, there's some tax advice involved in that question, Scott. So, consult with your tax preparer or your
There we
CPA.
go. There's a disclosure, everybody. There's the
Yep,
disclosure,
yep.
right?
There we go. Once you start doing it, you can't stop yourself. You're talking
Right.
to a friend, you're like, I'm not a lawyer. I'm not a CPA.
Yeah.
But number one, I'd say is make sure you don't keep going further in the hole. So if that means that you're a couple of years behind and you're staring down the barrel of this year's tax season, maybe the first thing you should do is file an extension for this year's taxes, so that you're giving yourself time to go back and take care of the things that happened ahead of time and further in the past, right? I'd also say you need to do everything you can as soon as you can to get as many of your primary sources of your primary records as possible.
Mhm.
We think about all of our bank records as kind of always being there, but these days banks are not always amazing about keeping your transaction by transaction records easily accessible for you for long time periods in the back. Or if they are, maybe they're in PDFs instead of in a spreadsheet. What you can do with a spreadsheet is you can work with it, you can manipulate it, you can upload it into REI Hub and be able to book all those transactions. On PDFs, you're going to have a lot of manual work, a lot of manual transactions to do. But when you're looking years in the past, you're still going to have to go, to as many of the primary source records as you have. Also, because you need those things in case there's ever a potential for an audit. You need to be able to substantiate your record keeping, and take a look back there. Off the top of my head, those are the top two things I would look at.
No, it totally makes sense. Now, Obviously, as we're in the new year now, people have a lot of those resolutions. Hey, I want to do better with my books. I want to do better with tracking things. I don't want to just piece it all together with a bunch of sticky notes on my wall here and try to put it together through TurboTax or something like that. That is
Mhm.
not as easy. How difficult is it for folks to get started? How, what's the easiest way or what's the best way? Maybe walk us through kind of the process of starting to put their books in order and working with you guys.
Sure. We do our best to make it easy because we're providing an industry specific, a subject specific solution for you. And a lot of what many investors encounter when they're starting their bookkeeping is they're looking at a blank slate. They're looking at a blank spreadsheet that has nothing in it. And they're saying, how do I structure this? Even if I can put a transaction in there, what's supposed to happen with that transaction? Or they're looking at a generic piece of accounting software that was designed for a services business or the corner store or a restaurant. And they're saying, what the heck is a class? What is a job? Well, how does this map to real estate? And that gets complicated. It's like, sure, accounting software is accounting software, but if it's not called what you expect, how do you expect to use it without any background knowledge or
Where's
experience
the
in it?
dictionary that outlines what I'm calling one thing for another thing, right?
Yeah,
Or the glossary of
yeah.
terms.
Where is my accounting to real estate glossary?
There
I
you
need
go.
that. And really, that's what REI Hub was built for, is we set out to make it as close to the language of real estate as we possibly can. And so when you get started in our system, you start off by defining your properties. You call it a property. You can have a picture of it. You can have units. You can have groups of properties. So we're trying to mirror what's happening in the real world. And then we're giving you the opportunity to connect your bank accounts to be able to get that flow of transaction data from your bank into your accounting software so that you can then build your books, because the individual transactions, the expense, the 75 bucks at Lowe's and the $1,000 deposited in your bank account, those are the building blocks of your financial records. It's the individual transactions that happen. But then once you have them, you need to be able to do something with them, right? And so what REI Hub has done is we have built transaction types in the language of real estate so that if you can tell us what this was it an expense? Was it a loan payment? Was it a credit card payment? We can then narrow down the options that you see on that next screen so that you can get it right without having to know quite as much. If you tell us it's an expense, we're going to ask you, okay, what property was it and what expense account does it apply to? And we start you off with expense accounts that exactly match the IRS Schedule E so that we've got the shortest possible distance between keeping your books and filing your taxes. Now, of course, we allow you to expand that chart of accounts as necessary because that's where you get the opportunity to learn from your books, to gain additional business intelligence, is when you add granularity so that you can see where you're spending that money and how you're spending that money and who you're spending that money with so that you can make more intelligent decisions about your business based on what has already happened. But at the same time, we don't want to overwhelm you because that's counterproductive. We want to start you off simple and let you, based on the situations and the complexities and the nuances of your particular real estate business, define what that additional granularity, what that additional level of detail should be. And then we're going to give you further features that are going to make some of the more complicated things a little bit easier. One thing that's unique about REI Hub is we provide the ability for dynamic loan amortization. Now, what does that mean? That was kind of a weird sentence. It means, again, like I said earlier, your loan payment, which is a fundamental part of real estate bookkeeping, is not a simple expense. It's not a simple loan repayment. It's got a lot of different pieces in it. So if you give us some basic information about that loan, we can help break it down into those component, principal, interest, and escrow parts for you on an automatic and ongoing basis, which means that your books are more accurate on a month-to-month basis. And at the end of the year, you're going to have less work to do. And we're one of the only systems that I'm aware of that is going to help provide native fixed asset or capital expenditure tracking. So all you people who are value add rentals, fix and flips, people who are not just keeping their properties operating, but are continuing to invest in them and improve them. Well, guess what? You can't just deduct all those expenses in the year in which they occur. You need to capitalize them. You need to depreciate them. And because this is such a larger part of real estate investors' financial lives than it is, again, of a CPA's business, of a restaurant's business, just like the financing part is, we've invested to make this as easy as possible. Again, a little complicated, but
Mhm.
we're doing what we can to help walk you down that path and get you into the right spot. And then on top of that, we have a support team who actually knows something about real estate bookkeeping. We're not your CPAs, but there's very few people you can call and say, do you think this is an expense or a capital expenditure or fixed asset purchase? Or how do you think I should categorize that? There are very few people you can call that are going to pick up the phone, know what you're talking about, and help get you to an answer without having to pay $300 an hour to talk to your CPA.
Right. That's the big key right there. Yeah.
And with those things, I mean, you're well on your way. So get started, set up your properties, link your bank accounts, start booking transactions, reach out when you got questions, and we're going to help get you on that pathway towards, if not going back 5 years, at least making sure that on the way forward, you're doing things a little bit more repeatably with a systematic and organizational focus and giving you the confidence to know that you are doing the right thing for your business. It's a
Well,
little bit like working out.
yeah, totally. But you can see the results versus, what are my numbers actually telling me? Where am I spending my money? My cost per leads? Where am I getting the most bang for my buck when it comes to a variety of things versus just looking at, okay, what are my bills and what do I have in my checking account? You know,
That's right.
that's what a lot of people do. There was oh, what was I watching the other night? They were like, oh, it was like Landman was on talking about, oh, my daddy always told me either A, you got to learn how to balance a checkbook and be good at that, or make enough money that you don't have to balance a checkbook.
Amen to that. Yeah. Of course, the more
uh,
money you have, the more money you have to misplace.
exactly.
But there
More
is a little bit
write-offs,
of truth.
more line items, more businesses, more cash flow to keep track of for you.
Yep, yep. And we're often guilty of uh, being deal makers, being entrepreneurs, being people who are trying to find I don't want to say the gaps, but find the opportunities. Um, that that means that sometimes we're biased towards complexity, and that can come with a cost.
Hmm.
The more complex your investment structure is, the more different types of investments you have, the more complex your legal structure is, the more bookkeeping work you will have. And so therefore, if you're listening to this and you're saying, gosh, I have like 3 different kinds of investments, well, the more that means you need bookkeeping software to help keep things straight, and understand the different needs of those different types of investments.
Awesome. What's the best place for people to go to start their journey on this to get the ball rocking and rolling for them, Adam?
Great. Well, if you are starting your rental property journey in general, you should be going to turbotenant.com. TurboTenant is REI Hub's biggest partner. They're the REI Hub and TurboTenant are the same thing. REI Hub is the accounting arm of TurboTenant, but TurboTenant is where you're generally going to start because that's where you're going to be able to manage, to market your properties. That's where you're going to be able to find applicants, screen tenants, collect rent, handle maintenance, do all the things that are pushing you out into the real world where you are corresponding and you are making it happen. And from there, you're going to go through TurboTenant into REI Hub, which is the back office, which is the accounting and the bookkeeping side of things. That's going to help keep all that information organized and comprehensible by you and your accountant and getting ready for tax time. Now, of course, maybe you're not a rental property investor, or maybe you already have a management system in place, in which case you can come directly to reihub.net, where you can also come to us, not going through TurboTenant if you don't need that property management side of things, and just have a robust accounting system, double entry accounting system set up for the needs of a real estate investor, and be able to rock and roll from there.
Well, but I love the fact that with the turbo tenant, as you're putting those things in, it's automatically, you don't have to enter it in a second time on a
Absolutely.
separate piece of software, different kind of logins and stuff. Well, I mean, there's probably a little bit of login to it, but having that stuff already there for you, which is hopefully a big
Yep.
chunk of what you're having
If you
to
start from your
document.
TurboTenant account,
Yep.
if you start from TurboTenant and you add REI Hub on a TurboTenant, you're going to have all of the properties you have in TurboTenant automatically created in your REI Hub account. You're going to have your entire rent payment history collected through TurboTenant automatically in your REI Hub account, and that's going to turbo launch your ability into getting up and running even faster.
Awesome. Awesome. I love it. I love it. I love it. Big challenges for this upcoming year. Any changes to the tax law that's kind of surprised you, or people should maybe keep a little bit of an eye out to talk with their CPA about?
Um, Couple of things come to mind. minor adjustments. Every year the IRS mileage rate adjusts.
Yep.
If you use REI Hub, that's going to happen for you automatically. You don't have to worry about it. But for all you doing it yourself, you should know. And there are some ongoing kind of steps from the last big tax laws passed back in 2017, where we are having things like bonus depreciation and stuff like that is kind of in a step down process where there was a period of 100% bonus depreciation, then 80%, then 60%, 40%. But I definitely recommend you talk to your tax preparer and your financial professional about that. Second disclosure. Those are the biggest ones that come to mind in terms of things that are changing. So in general, the day-to-day bookkeeping stays pretty consistent, in terms of how you are building your books, in terms of getting to that profit and loss, that Schedule E. That's going to be relatively consistent from year to year. What happens at the CPA level, at the tax return level, has a little bit more variability to it. But those are the first things that come to mind in terms of what's changing, because there hasn't been any like big, massive legislation on that recently. But the IRS is always updating guidance. And there are always some things that are a little less clear from past years where they're trying to clarify. So definitely a good conversation to have.
Now, what's the cost for using REI Hub for folks getting rock and rolling?
It varies based on the size of your portfolio. So the more properties you have, the more costs. But generally, it ranges from about $9 a month up to about $80 a month, just depending on. Now, price is lower if you subscribe annually. We're going to compare very favorably to your generic accounting softwares out there. And you're going to find that you're going to be surprised at how much you get for that.
Amen. The big bang for the buck for what you're paying for, definitely. And having the ability to call and talk to somebody to ask them, hey, where do I put this? What does this category fall into is one of the most important things people have. They want to reach out and touch somebody or talk to somebody at least, versus it just, I got to wait on a hold or wait for a call back or all that other good stuff.
Hey, it's tax season coming up. We're going to be busy. We might have to call you back, but we're based in the US. We have experience with real estate bookkeeping, and we're willing to talk to you about your books.
That's awesome. Good stuff there. Well, check it out, guys. We'll put the links for you guys to get signed up, to check it out, to get your rock and rolling. If your finances are getting your books in order is one of your big resolutions for 2025, which I know most of you are, or how to streamline the operations where you're not the guy doing it at 2:00 in the morning trying to figure out everything, which I know most folks are or aren't doing it at all. So go out, check it out, REI Hub. Adam, thank you so much for coming on the Note Closure Show here and sharing your knowledge and passion. And we look forward to helping a lot of our investors and clients out get their books in order this year, huh?
Absolutely. It's been a pleasure. Thank you so much for your enthusiasm for what can be a little bit of a dry topic, for bringing the good word to your audience. It's been a pleasure being here on the No Closer Show. Thank you so much, and stay warm and dry out there.
Sounds good, Adam. All right, guys, go out, take some action, check it out. Like I said, we'll put the links in the show notes and description for you. Take the opportunity. It's always good to review your systems, review what you're paying, your vendors and stuff like that. This is an opportunity for you to save, but increase the skill and the clarity of your numbers. Why would you?